Good afternoon. Good afternoon. All right. Glad to be back. We didn't have a session for 2 weeks, but good to be back on schedule. And I will share what I was doing for 2 weeks. I mean, in fact, it was 1 week. I was away for a week, but it was a good break from the market as well. So, but good to be back. Good to get engaged in the market. And looks like when I was away for a week, a lot of things have happened. Markets are so dynamic, so not surprised to see that. But yeah, November has been great month. What else you guys have been doing? What caught your eyes? Anything special? Anything specific on Thanksgiving? I'll also sip some coffee. Any new stuff? Nothing? Life as usual, I guess. All right, make sure if you're speaking is my. Can someone just. Can we do some audio test? To make sure.
Looking spiffy.
Okay, all right, so it looks like it's picking up the speaker, it's a monitor speaker. Okay. Anyway, doesn't matter. As long as you're able to hear me clearly, that's fine. And if you're talking, you may have to talk a little louder because it's picking up a different speaker. Yeah. Okay. All right. So yeah, just give me a sec. Why is it picking a different speaker? Oh, come on. All right. Okay, I think now we should be good. If one of you can speak something.
Hi, Vivek.
All right. Sounds great. Yeah. I was wondering why it is picking a different speaker. Then I realized, the main speaker wire was plugged out. So the wire is not plugged in. It's not the speaker's fault. It's my fault. All right. So, like I was saying, glad to be back. Glad to be back in the routine of looking at the markets, studying companies and talking to you guys every Saturday. So I hope you were able to make some good use of the free time on Saturday. And but now we're back. We're gonna talk about stock. We're gonna talk about general market and anything else that interests you. Hey, so with that, let's start with today's session. A lot of things happened last week. One which is unfortunately the Charlie Munger passed away. He was 99, almost getting to 100. So it was like just 5 weeks away from his 100th birthday. But uh, I think most of the world knows Warren Buffett doesn't need any introduction. Not everyone knows about Charlie Munger, specifically the people who are not close or to investing. They don't know about Charlie Munger, but Charlie have had a huge impact to make Berkshire Hathaway what it is today, and to make Warren Buffett what he is today, right? So Warren Buffett, when he started his investing career, just started as what a very pure play value investor, student of Ben Graham, cigar butt investing. It was Charlie who changed his way of investing style from just being a cigar butt investing, in which you find companies at the cheapest possible price. Maybe the company just before they're gonna go under, you find it at such a cheap price and just take one last puff out of that. From that kind of investing to what Warren is today, Charlie had a huge impact on him when he told, rather than trying to find out, fair companies at a very cheap price, let's look at a great companies at a fair price. And that's what then we saw, investment in other companies like Coca-Cola, American Express. These were not really available at a very cheap prices, right? But but these are the companies that have made Berkshire Hathaway what it is today. So a permanent fixture in Berkshire Hathaway's annual general meetings, shareholders annual meetings, and Charlie is known for his one-liners. So I think, my opinion, world has lost a great, not just a great investor, but a great educator. Unlike Warren, who is focused and studies a lot around just investing, Charlie reads and learn about many other subjects. It's like multidisciplinary area. Few things that I do want to talk about, some quotes of Charlie, which at least I've learned a lot from him. And I hope you can also pick up some of his words of wisdom. A few of them are like, the first rule of compounding is to never interrupt it unnecessarily. Right? I think the math just works out. It's difficult to wrap our head around the impact of compounding, and so very apt. Second one, investing is where you find great companies and then sit on your ass. I'm sure Charlie probably would have said in more colorful words. He's generally, more liberal with the choice of his words and vocabulary than Warren Buffett. He didn't used to hold anything back. So more important is to buy the great companies and then do nothing. I mean, so that you can let the companies compound and don't sell it sooner, right? Third one, always invert, right? Instead of trying to find out, one way to look at the solution of a problem is, instead of saying what I should do, if it is easier for us to say what I should not do, that's great, right? So always invert. I say comment, MELI for you. Yeah, I mean, there are a few other companies which I just want to hold for. I mean, I want to hold all the companies that I hold forever, and let it compound. And I am well aware that 25 to 30% of companies will go to zero. That's fine. Today, I don't know which of those 25% would be. So I want to hold everything that I own. Another one, I think you would understand any presentation using the word EBITDA if every time you saw that word, you just substituted that phrase with bullshit earnings. He hated the use of EBITDA, adjusted EBITDA, hated consultants and all that. Which brings us to next one, which is, I don't think you can trust bankers to control themselves. They are like heroin addicts. Both, I think, Warren Buffett as well as Charlie Munger, not fan of Wall Street, not fan of giving fee to Wall Street bankers, right? They probably are champions of individual investors, then going through hedge funds or the Wall Street bankers.
Vivek, I don't know why the noise isn't loud, but I think about 25 years ago, Buffett was talking about how he was not getting these super returns, like I guess the S&P was at that time. So he had to coincide and buy some of these high tech companies. Do you recall that? I mean, you weren't alive then, were you?
No, I was alive, but so Warren Buffett, he was not getting the return that you're right, that he wasn't getting the returns. Berkshire Hathaway wasn't. Berkshire Hathaway was trailing S&P because they were not investing in tech companies. So, but the reason they are not investing in tech companies is not that he doesn't understand tech company, but what he. So currently I'm reading all the Berkshire Hathaway letters right from 1957 all the way till today. So it's like right now I'm at, I think, year 2001. So I'm done.
So he had to. So he did succumb to investor pressure and invest in stuff that he didn't feel comfortable with.
No, so he didn't invest in tech during the 2000, around 25 years ago. He did not. He invested in tech very late, and I think the first one he picked was IBM. Didn't really work out, and I think that tells um, what they have been saying all through is not that they don't understand where the tech is right now, but what both Warren and Charlie saying is that they can't figure out what the tech would be, the status would be 10 years later, because the technology changes so fast that you don't know what will be, whether the company will still have the same mode, whether the tech will survive 10 years later or not. Right. And that is why he says we don't want to invest in businesses in which we cannot project how that business will perform 10 years later. And the technology is such a business that Warren and Charlie say, we do not have that capability to project what it will do 10 years later. Right? And that's why they were not investing in the tech companies. So essentially, yeah, during 2000, they trailed. I think even now, if you look back last 5 years, probably Berkshire Hathaway might still be trailing S&P 500. But overall, their track record is still way, way, way better, right? So whether invest in tech or not, who cares? As long as you still have generated the returns, which are market-beating returns. And eventually, they invested in Apple, all throughout what almost 70 years of investing by Warren Buffett. He never invested in tech companies. I mean, they took a position in IBM and some small positions, and eventually they invested in Apple. And his logic for investing in Apple was not that it's a tech company, but it's a consumer product. And they understand consumer product unlike any others, right? Coca-Cola, they know, is a consumer product. Gillette, they had investments in Gillette, consumer product. So their thesis on investment on Apple was not around the tech, but around the consumer product and the brand that Apple carries. Right? And after 70 years, they finally did that to invest in so-called, one of the biggest, what we call as the biggest tech company. And that has generated the returns, which has surpassed the returns from every other investment in their career. So, yeah. Yeah. So I think now we could see more investments in so-called tech companies, because nowadays they got more money managers than just, now only Warren left, Charlie's no longer there, but their investments in Snowflake, I'm sure that hasn't come from Warren or from Charlie. The pre-IPO investment in Snowflake probably would have come from either Todd or Ted, right? The two new money managers that they have on board. And probably even the Apple investment, maybe the initial thought must have come from Todd or Ted. So going forward, we may see Berkshire Hathaway taking stake in the companies or investing in the areas where we haven't seen them doing it for last 50, 60 years, because the decision makers will be changing. So at least that's my understanding of the tech and Berkshires. All right. Next one. We want to read. Spend each day trying to be a little wiser than you were when you woke up. This is something that I think each one of us should follow. If we can become 1% better every day, over the year, compounding, it's a huge investment in ourselves. I think that's also came from Charlie, or maybe Warren. The best investment that you can make is in yourself. And, next few about derivatives. It's a casino in drag. They make witch doctors look good. Yeah, so neither Warren nor Charlie are fan of derivatives. They're not fan of futures or options. All intelligent investing is value investing, acquiring more than you are paying for. You must value the business in order to value the stock, right? The whole investing community is divided into, are you a value investor or are you a growth investor? I think I do subscribe to this, saying I think every investing is value investing. At the end of the day, I want to make sure that the value that I get from the investment is more than the price that I pay. Right? Whether it's Google, whether it is Snowflake, that equation has to satisfy. Now, some people might say Snowflake is a growth company, it's a growth investment. In my eyes, it's still, at the end of the day, it is still a value investment. Finally, his comments on the Bitcoin and crypto in general. I don't welcome a currency that's so useful to kidnappers and extortionists and so forth. Nor do I like shuffling out a few extra billions and billions of dollars to somebody who just invented a new financial product out of thin air. Right or wrong, he's known not to hold back his thoughts. Some people like it, some people don't. But I think world has lost
Vivek,
a great investor last week. So
Vivek,
go ahead, Sri.
the derivatives is a casino in a drag. What does it mean? What
So
is it talking about?
so essentially, it's like a what's say over casino in kind of overdrive. People go and bet, and derivatives allow them to bet without take some high leverage bets. Essentially, that's what he means.
If I understand, Warren also deals with derivatives or preferred stocks and all sorts of other options that he does.
Yeah. So this is coming from Charlie, and like in some cases, Warren and Charlie may have a different opinion, but Charlie is known to be to share his thoughts, whether you like it or not, whether it is incorrect or not, or whether it is correct or not. He will still share what he feels. So
Okay.
I agree with you. I mean, Warren is known to, I'm not sure recently, but he have had some of the great successes in Coca-Cola by selling put options against those.
Okay. The other point that I wanted to make was the value investing. The value is based upon your estimation, and there are so many value investors who have gone, really hurt significantly at different times of the cycle. Instead of saying it is value investing, I would say that you need to evaluate the right time to purchase anything. Market is one where everybody has the information. You don't have anything special information when compared to another person who is investing in the same company. Somebody is selling and you're buying, or you're selling and somebody else is buying. Your opinion on that?
Yeah. So I think we are talking maybe a little two different things. I agree. I mean, what you're saying is right. There is always everyone have their opinion, and depending on time, people will make the decision. Maybe I find it's the right time for me to buy, and someone else will think it's the right time for them to sell. But each one of the buyers and sellers will make a decision thinking that the transaction is providing a value to them. And if I'm buying it, I'm thinking that I think it's underpriced, so I do want to buy it. And if someone is selling, either they have met the objective what the investment wanted to do, or their understanding is that the share is overpriced, right? But from my perspective, at the end of a day, each one of us is making their own value judgment, right? In their individual respects. So
Agree with you.
I just don't want to categorize, and when myself as whether I'm a value investor, growth investor, or whatever, I'm like, every investing is value investing, because there is no investment that I'm picking up and saying, you know what, yeah, let it grow at 50% every year, and the business grow 50% at every year, and I don't, the share price doesn't follow the business. At the end of the day, I do want the stock or the share price to follow the business and return me more than what I've invested in it. Whether it is the business grows at 50% or the business grows at 20%. Or in some cases, the business may not be growing at all. right? But cases like the cigarette companies, Altria, right? A great example. You don't always have to look at growth to get the returns. Cigarettes business have been going down, overall as a market, but the Altria investment have been one of the great investments over the past few decades. So or if I would say I'm a value investor, don't think that I'm looking for cheap PE ratio, right? If I pick a stock in which PE is like 30, and like you say you are a value investor, why you're picking PE at 30? Oh, that still is a value investing for me. That's all I wanted to say. And I think that's what probably even Charlie says the same thing. So I'm sure, I think there is a book called Almanac of Poor Charlie's Almanac. Maybe I'll see if I can get my hands on it as a tribute to one of the great investors of modern times. So, I mean, 99 years old. We should have expected, but for whatever reason, we saw Charlie coming in every Berkshire Hathaway meeting. Plus, he also is a chair. He was also chairman of Daily Journal. He was very active there too. So to me, it just looked like that this guy is gonna live for another decade or so. Not the case. It is what it is. Let's move on. So, as you guys know, I was away from the market. I just want to share what I was doing while I was away from the market, right? So I was traveling, and that is why we didn't have the session the last 2 weeks. Just some pictures from where I was. I traveled to India in front of, I think this is one of the 7 wonders of the world, in front of the Taj Mahal. Growing up in India and also seeing a lot of Bollywood movies, I've seen countless numbers, of pictures. I've seen this monument in thousands of pictures and videos, but the feeling that you get when you first time see it in real life, it's amazing. I just can't describe it. When we just entered from the entrance, when we just got in and we saw for the first time, it was just mesmerizing. Despite the fact that I've seen this picture in videos thousands of times. But so if you get a chance, I would say this is probably must visit. I guess I have visited it when I was maybe less than 10 years old. So it's been like many decades. So I have a zero recollection of, going there with my parents. But in my adult life, this was my first visit to the Taj. Then yeah, we went to same place, Agra Fort, another tomb. Spent a little time in Delhi. This is Qutub Minar, Lotus Temple. Yeah, that's what I did last week. And that's the reason why I was away. I was traveling. It was a quick trip for a family gathering, just a 1 week. Sometimes it gets brutal because you land, 16 hours straight flight, go there, you start to have a jet lag, and in another 2 days you have to start preparing for another jet lag because it was like Saturday to Saturday. I left on Saturday morning and came back on Saturday. Quick 1 week trip. But glad to be back. And once I came back, and I didn't have great, it was good that we were all away and I didn't have to bother about the markets. Sam said 10 ancient wonders of the world. Yeah, I think it's called the 7 Asian wonders. Yeah. It's 400-year-old monument, but it's a great piece of architecture, great history behind it. Whether it was cooperative for you, absolutely. I think the best time to visit, at least India, is during, I would say, November, December, January, because I no longer can bear the heat in India. So I would rather go in winters. Even when I go, to my parents' place, we try to go in December. As a nice pics, welcome. Yeah, we managed to click some pics. How long was your flight? So the quickest, the shortest, and the fastest flight is 16 hours. and that's a straight direct flight from San Francisco to New Delhi. Not the best airline, but our objective was, because we were short on time, objective was to go suck it up, sit in the seat, and 16 hours later you just land on in Delhi airport. Any other flight, I think, if you take minimum, it will be 22 hours. I think there is a one that goes to Tokyo. It's 22 or 24 hours. But we were short on time. So we rather like took a direct flight, 16 hours. Is it on Airbnb? I'm not sure what do you mean by that, Asif? What's on Airbnb? Oh, okay. Uh, Supal went there in August. Yeah. Oh, it is Mesmer. Yeah, exactly. The first look. So I went there with my daughter. The first look that we got, I'm like, wow. And it's like, despite me seeing this like thousands of times, I'm like, it's great. So anyway, great to be back. While I was gone, I'm like, when I came back, I'm looking at the markets. I'm like, wow, markets have done so well. Maybe I think maybe I should disappear more often, because when I was not there, market is doing so good. Okay, what is the last picture? This is called a Lotus Temple in Delhi. So I had a half a day to spend in Delhi before, so we went there for a family marriage. So I spent a day in Agra, half a day in Delhi before we went for marriage. So this is called a Lotus Temple. It's from a community called Baha'i. There is, and this whole big hall is nothing but, there are no idols of any gods, etc. It's just a meditation place. And you go in this hall, you're they ask you to silent all your mobile phones, don't talk, go and just sit there for how much ever time you may want to sit. So I think I only lasted for 20 or 30 minutes before I'm like, okay, I'm done. I can't talk, can't look at a phone. But it's a great place to just go and sit and meditate. It's called the Lotus Temple.
Vivek,
Yeah.
how did you feel now as opposed to when you left? You weren't financially secure now, and now you're wealthy beyond your wildest dreams. How do you feel when you
So
return?
no, so I think well, a little bit corrections. I don't think I'm wealthy beyond my wildest dream, but I have done okay throughout my life. And maybe it is just my temperament is I'm generally always okay in whatever position I am in, right? But I mean, if you're asking from feeling from going to India and coming back, I think India has changed a lot. While I love the improvements in the infrastructure, but I just hated the pollution in Delhi is still so bad. I mean, that's the one thing which I hated while I was in Delhi is still so polluted. But you can imagine that the place that because I had some time in Delhi, so we were staying in a hotel, and there I could find Starbucks, I could find some, the coffee chain of what I saw in London. Uh, and I could find, all the big brands out there. So from it, and that's, I mean, that the place we stayed was a little, high-end place. Not that everyone will go and stay there, but you could find anything that you could find in US over there. It's equally easy to spend money in India or the way we can spend in US. So from that perspective, I think India has come a long way since I left it. Especially when I attended the marriage, I'm like, what the heck? This is how I know the marriages in India. It's called the the big fat Indian wedding, but even that one was beyond my imagination, because I have attended a wedding after like 23 years, and within a generation, a lot of things have changed. I couldn't imagine, seeing the drones, using drones for photography, using your firecracker, the use of firecrackers. It was just choreographed like a like a show, and it was so amazing. Eventually, and then I met some of my cousins, and many of them are actually focused on investing. One of them actually runs a treasury for a big what do you call, an asset management company. And so I was talking to him around what they do, what opportunities do they find in India in terms of alternative investments and all that. So we had some good discussions. Sri said, change for better, all in all. Oh, yeah. Lotus Temple, high ceiling and windows. That's true. And other thing I saw was Indian government is kind of encouraging more and more use of electronic payments. And one place where, I had to pay tickets, I saw that they say if you're paying in cash, it's more expensive than if you pay by the credit card or a debit card, which is the other way around that I see on other places is, if you pay by cash, because the companies don't have to pay the interchange fee, you can get some discount. But in India, I saw that you're paying by cash, it'll cost you more than if you pay by the debit card. And maybe it's just one example, but I do see a lot of a push towards digital payments. Unfortunately, I could not use, I think I talked about the payment infrastructure a few weeks ago, maybe a couple of months ago. And I told that if I go to India, I'll try to use their UPI payment infrastructure. But I couldn't use it because they haven't yet rolled out use of, using international mobile number on their UPI payment gateway. So UPI is basically universal payment interface. The authority behind that, they have already approved it, but each of the banks have to implement that for their customers. So the bank in which I have account, they haven't yet implemented it. So I couldn't use their UPI to just pay to, let's say, a push cart on a street or a street vendor, right? Which is where we don't, so that paying through QR code and all that stuff, which we can't do in US. My cousins and nephews and nieces, they were easily able to do it because they had all that Indian mobile phone. I had an international one, so I couldn't do it. Sachin, is that you or SRK? Oh yeah, I didn't realize, this is SRK favorite pose. I just did what my daughter asked me to do. Samson 1997 went to China in debt, maybe 10K left in 21, 500, miserable now. Back then, no, don't worry, good times will come back. Connaught Place is a must to visit in Delhi. Yeah, CP, we had plans to go to CP, but then my wife's flight landed a little early. And then after Lotus Temple, so I told the driver, no, let's head back to the airport. Otherwise, my plan was to drive around CP, India Gate, and just show my, just don't get down, just drive around and show to my daughter, but we had to cut it short. Best thing was paying most of the street by GPay. Yeah, exactly. I couldn't use that. So I inquired and I looked around, and they say, yes, I call it the National Payment Corporation of India, or the authority behind UPI. They have approved usage of international mobile phone numbers, but then not every bank or every fintech has implemented it. So maybe next time I do want to try that. So I just use my debit card of my Indian bank. China uses Alipay, WeChat Pay. Yeah, similar to Alipay, there are many payment companies in India. So I'll probably use that next time. All right, so that was a quick update on what I did. And hold on, maybe I can share one more thing since we talked about big fat Indian wedding. I hope. Okay. All right. And this was also surprising for me that nowadays you need to have, the The weddings in India, like there are 5, 6 functions, and everyone you have a separate dress. So this is what I was, every 2 days, I'm like 6 separate dresses, and I was like getting so crazy because I generally want to travel light. And my wife was, no, 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 you need to have this, you need to have this for this one. I'm like, give me a list of what am I supposed to wear when. And I ended up in 2 days, I ended up in 6 different attires, quick side conversation. But it was fun. It was fun. That's very unusual of me because I generally I'll pick up one dress or two maybe and use it for a couple of weeks. And here I'm changing it like after every 3-4 hours. I need to go and change. It's like, but it was fun. All right, let's get back to markets. Sorry, it was a little diversion from what we generally discuss, but I was super excited around what I did last week. Thoughts I'll share some other stuff with you. Right. Okay. So November, we just finished November. Now we are in the last month of the year. And this was a November to remember, right? Markets gained 9%. Let's talk about the horrible October, wherein markets, everyone was getting bearish about the market. I hope you didn't get out of the market, because if we did, we missed the 9% gain from October to November. This was the best month in almost a year and a half, and this was the second best November in last 30 years. So below is a chart of 10 best and 10 worst months since 1992. That means almost 31 years. So this was November 23. This is a 7th best month. 1, 2, 3, 4, 5, 6, 7th best month in last 30 years, and second best November. I think the other one was November 2020, which was like little up more than 10%, but almost 9% in November. Not bad at all. So it's a great month. I don't know if we'll continue. Some think that the Santa Claus may have arrived early, but no one knows. At the end of the day, we don't know what the market's going to do in next 1 month. So I just don't even want to guess. So I think it was 4 weeks ago, we looked at the rates and say the rates may be peaking, and that may be good for stocks. And if you look at 10-year, over the last few weeks, 10-year has been coming down. And essentially, at the end of the day, it's the same game. Higher bond, the higher bond yields doesn't sound good for the stocks. And when the bond yields are coming down, you see the stocks perform well. What else? But 1 month doesn't make an investment journey. So I don't know if we see the same 9%, or maybe we see the same momentum carrying into December or not, but we'll be there to whatever December has to bring in. But so far, so good. November was great. And I was thankful that, maybe I was away from the market, so didn't take any stupid decision, and stayed invested in it. Couple of macro stuff that came out this week. PCE, the inflation numbers came out, and it rose 0.2% in October, which is a slowdown from September. So still well above the Fed target. I think the increase is 3.5%, which is above the target of 2%. But it slowly it is coming down, and that is also, I think, making market more confident that Fed is gonna decrease the interest rates. I think right now the market is expecting is Q2 2024. Bill Ackman, the famed investor and chairman of Pershing Square, he is expecting in Q1. But we'll see what Fed does. And I know Jerome Powell I think it was on Friday, It kind of wanted to throw cold water, saying, "Don't raise your hopes. We're gonna be, data driven," and the same spiel that he always does. And I don't know why, all the financial media spends so much of airtime in on what Jerome Powell has to say, because he always says the same thing. So no different this time. It's just still the same stuff. We're going to be data dependent. We're not thinking about cutting the rates, but market thinks that the Fed will start to cut rates in Q2. Over past 6 months, core PC was even slower at an annualized rate of 2.5%. So that's what giving more hopes to the market. Economy is a little bit cooling. Personal spending rose only 0.2% in September. So inflation going down. Economy cooling means again, that helps in on the inflation side. So personal spending rose the smallest in 6 months. Housing permits were above, but actual starts were lower. And similarly, weekly jobless claim ticked down, but the continuous job claims jumped more than expected. So job market also cooling down. So it means the inflation will not come back up. The big fear that Fed has and the Jerome Powell has, he doesn't want to be another Arthur Burns. So if you go back and look in history, I think it was 1970s, 1970 or 80s, Fed chairman Arthur Burns, he thought that he's conquered inflation and probably reversed what he was doing too early, and inflation came back, roaring. And so Jerome Powell doesn't want to do Arthur Burns into two. So he just want to wait and watch. They would like to err on the side of caution, and rather than trying to, become dovish too soon. So right now, it feels it's everything up season because stocks are up like we are in the bull market. Like market is up. Overall, S&P is up like 20% for the year. Gold is up like we are heading into recession. If you look at gold, GLD or GDX, I mean, gold is, let's go to 1 day. GLD is up, 52-week high. Wow, 192. So it looks like, and generally people, buy gold if they're afraid around recession, if there are fears around recession. Now, oil prices are up like recession got canceled. And oil prices basically, I mean, it's only on the last day. There's some talks around cutting the output. Bonds are up like inflation is back below 2%. Over this year, bonds have been down, but over the last, I think, 1 week or so, or over the last month, bonds have been nicely up over the last month or so. So home prices are still up like inflation at 10%. End of the day looks like it's a everything up market, and that makes me little jittery. Whenever I see this, we have seen the similar stuff earlier also. But we'll see where market ends up. Now, equities having touched a year-to-date high last week. S&P is now within 5% of all-time high. I guess all-time high was around 480 or something. SPY, does anyone recall? We are now close to 460. Yeah, 479.98. Yeah, almost 480. So now we are 460. We did 460 at the end of July. Now, and then we gave up from 460. We were down, 15% to now 410, back up to 460. And look at this. This is like just in 1 month from 410 and end of October to end of November. what a huge run up in basically the market. And these are the period, after this whole big downturn in October, where most of the money gets made. And this is not only the first time. Time and again, we have seen that these huge movements in the markets come after the big drops in the market, right? So the best thing is how to not get scared of the drops and stay invested so that we can then enjoy these up moves in the market. 3.9% from all-time high, right? It's just pretty close to 4% from all-time high. I'm not predicting that it will hit all-time high. These are just numbers. I have no idea of what the markets will do. And if you're looking for any predictions, not the right person to ask. So year-to-date market performance, this is SPY up 20.5%, which is almost double the average returns of SPY over long term. And on the long term, it is generally between 8 to 12%. Take a midpoint, it is a 10% return over long term over last 80 years. And so far in 2023, it's already done 20%. And this is all after, at the start of 2023, the sentiment was really, really bad. Everyone was negative, especially the so-called smart money was completely negative around the markets. And then the market as always, market has a tendency to surprise. So it's back up 20%. NASDAQ, tech sector, almost 50%, right? 47%. Agreed, this sector was beaten up real bad in 2022. So it's just catching up from there, but 47%, can't complain. So, and if you're in the right stocks on this one, there are stocks that are like up more than 200%. RUT, which is small and medium businesses, Russell 2000, up 6.39%. Not if it wasn't for this month, Russell was actually negative. It's just in this month Russell was outperformed and ended up in a positive territory of 6.39%. Dow Jones Index is up almost 10%. Look at the two huge candles in last 2 days. I generally don't follow Dow Jones. I don't know. The rest of the world pay too much attention to Dow Jones because that's the oldest index. But from my perspective, I think it has lost the relevance. I just can't wrap my head around the fact that the weightage in the index is driven by the price of the stock and not the market cap of the stock. Or either you make it equal weighted or you make it at least market cap weighted, but weightage to be driven by the price of the stock just doesn't make any sense. A company does a stock split or does a reverse split that changes its impact in the index. I mean, in what financial world does it make sense? But it is what it is. Since it's the oldest index, I think the rest of the world still pay more attention to Dow Jones than to S&P. Bonds, looking at the bonds, till year to date, almost caught up on year to date, and a huge run up in the last, I would say, month and a half, 6 weeks. Equal weighted S&P. Right? So the previous one that we saw, SPY, was market cap weighted. This is equal weighted S&P, 6.67%. So that does tell us that the gains in the S&P is coming only from the top market cap companies, and that is why the S&P, which is market cap driven, SPY, which is market cap driven, is at 20% year to date, whereas if we look at equal weighted S&P index, which is RSP, it is up only 6.67%. The fact is, I think the 7%, the magnificent 7 are on an average are up 70%, and the rest 493 are up maybe 1 or 2%. I don't know the exact number. I read somewhere. So, and that is why it's a skewed market. Sector wise, overall great performance for a month. Real estate, information technology, consumer discretionary, financials, industrials, they've been all up double digit, and that's what led to S&P gain of 9.56%. Energy has been down for this month, but yeah, over 5 years, energy is up 32%. Other thing, right now it is, everything up season, so why not Bitcoin? So Bitcoin has been up from 15,000 almost to 38,000. I think the latest one is almost 38,000. So up, what, 2.5 times in over 1 year. Investor sentiment, before in our previous session, when we met, investor sentiment was in fear, and now it's back into the greed category. So I'll be careful in deploying any new capital or any additional capital on the side right now. Yeah, you go for go to the market when the things are available at discount. Looking at some of the companies and how their stocks are performed over last 3 weeks, a lot of those discounts have disappeared. Right? So huge run up in the investor sentiment in the last 2 weeks. Yeah, this is what I think from our previous session, which was 2 weeks ago, we were in fear, and now we are in the greed. What else? Okay, yeah. So this is also look at a portfolio pizza, because this is the first time we are meeting after the end of a month, and I do share what I own. Before that, what did I buy or sell this week? Google, Trade Desk, this is a Japanese ETF, Nanox, Coupon, these were the buys. I sold Uber and Pinterest. Not that I don't like the companies, but I had a covered calls on it, covered calls and strangles on it, and the companies that both the Uber and the Pinterest have such a good run up. So I closed the calls, sold some of the stock to make sure that my cost base is still the same. I still own both the, I'm bullish about both the companies, still own it, my portfolio, but had to, just to make sure that 100 shares are not getting called away. And I sold some stock, closed the call, close the short call. So at the end of November, how the position looked like is top 15, not much change, except gold is out of top 15. And new entrant in top 15 is BA, which is Boeing. I've been holding Boeing for now almost 3 years. Hasn't performed, still below what I bought, but yeah, I'm patient. But is now moved into top 15 position. The reason gold is out, that if you've seen the tremendous run in gold, so I had a covered call on gold, and that got called away. I didn't want to defend it. I didn't want to, didn't want to take an action that I did with Uber and Pinterest. So then these got called away when I was away. The weekend of, I think, November 17th. So I'm like, okay, let it get called away. I'll get some cash, and then I'll try to wheel it. My perspective, I thought it was a too big a move from 168 to almost 185 in 2 or 3 weeks, right? So I have a strangle right now on gold, but that's the reason why the gold has dropped off from top 15. Positive in BA, not yet. So I bought BA after the initial 737 Max fiasco, and I think I jumped too soon because then the one after another one, Boeing continued to have its challenges. But my thesis was that it is too strategically important for US as a country. Boeing as a company is very important, so it won't go under. So I have to be patient and reduce the cost basis. So that's what I'm doing. So I'm still not positive in Boeing, but that's fine. All right, any questions on portfolio? Next time you'll see the pizza at the end of December. Other than that, I don't think there's any change. Yeah, the positions could have moved. The Mercado Libre, MELI is now the top individual stock in my portfolio, which is almost 5.85%. Even last October, it was Mercado Libre only. Yeah, so not much change. All right, let's move on. Did you see any big changes in your portfolio? Let me ask you that. A lot of stocks have, gained tremendously this year or even this month. Any big changes in your portfolio, your own portfolio? There were no surprises. All right. So what else I saw? IPO market looks like it's alive. I saw news that Reddit, Sachin says, closed some positions after taking profits. That's good. And this is what even I have learned, Sachin, is the reason I sold Uber and Pinterest. Over the years, you become a better investor, is rather than trying to defend and take a loss on closing the call position and still holding all the stocks. I'm like, no, I do want to make sure that because the stock has run up so high, it is no longer available at the same value where it was earlier. So let me sell some stocks and make sure that I keep the same cost basis as what I have before, what I had currently have. So I also sold Uber, Pinterest. I still have one more covered call on Pinterest. I'll see if probably next week you might see I sold a little bit of more of Pinterest. Sam says people are commenting that PTD market cap greater than Alibaba. That's I didn't see that, but PTD had a great week. And PDD. What's the PDD market cap? $193 billion. Yeah, you're right. Yes, it is. It indeed is. Baba is $178 billion. So, and I think that's because of a huge, PDD had a good results. So from 116 to now it is 145 in 4 trading sessions. But it's if I recall correctly, PDD is what community buying, social buying. This is someone correct me. I don't own the share, so I don't follow it very closely. Was it PDD or some other? Maybe I think it was like a social influencer buying and social and more of a community buying. A different business model, doesn't work in Western countries as much as it works in China. So, but yeah, they have performed. She says I'm close to all-time high in my account. Yeah. So I don't think I have yet reached there. I think my all-time high was whenever the market was close to all-time high in 2022. But I am much closer to that position. So today, I've been up nicely for this year. So I've been trying not to be greedy and just keep the deltas in check. The last thing that I want to do is over the next month, etc., lose a lot of the gains that I have had. So there are only two options: either I sell and realize the gains, which I don't want to sell because I don't want to interrupt the compounding. So again, I'm being just trying to reduce the delta by selling calls against the either the covered calls or just the naked calls against the just indexes. I see another comment, Ramesh. Adobe Broadcom up with, what's that? ASML. Oh, okay. Adobe Broadcom up with ASML going higher. Yep. ASML have a news to share. There's a change in the guard in ASML. Broadcom, they recently completed their acquisition of VMware, and so my friend who is in a VMware is not very happy about it. Right? Not from an investing side, but I think they're forcing everyone to come to office all 5 days of the week. And I think the culture of Broadcom is very different from VMware. So we'll see, how many employees, and they also did a lot of job cuts after this merger has been completed. So I see a Naresh, due to quick run-up, covered call called away. Yes, we should expect this in this huge run-up in the market, and that is why if you really want to hold the shares, and this is thing that I have learned, I think from 2021 when we had the huge market run-up. So I learned a few things. One is, if you really want to hold the shares, implement your coffee can portfolio. So I know exactly Pinterest, how many shares I hold, and I know, I will only do 1 or 2 covered calls, because even if those do get called away, the rest of the holdings in the Pinterest will be good enough for me. Right? I'm not gonna do covered calls against all the positions that I hold. Or if I hold only 100 shares and I don't want it to call away, I would rather do call spread. Because I learned in 2021, sometimes the stocks can go like crazily high. And I think that lesson has served me well in 2023, because despite some of these like Uber covered call, it's way beyond, it's deep in the money, but I still hold Uber shares and all that stuff. PDD is a single trick versus Alibaba diversified. Yeah, Alibaba, I agree. And right now, the valuation of Alibaba is really very attractive. Again, not a financial advice, but if you really look at their cash flows and the revenue and the price point at which it's trading, is super attractive. Right? And now the fact that Alibaba has also they share the plan of separating the big conglomerate into 6 different companies, each one of them unlocking their individual value. So the sum of those parts is going to be bigger than the whole current Alibaba. I mean, I am bullish, but I already hold position in Alibaba, so I don't want to add any more. And the other thing which is always uncertain is the impact or the the influence of Chinese Communist Party. I just can't put any number to that risk. Right? So yeah, but I'll wait for Baba to perform. Again, I'm in no hurry. It's been what, 3 years since I've been involved in Baba, so I still have many more years to go. If it also owns Temu, that is available in USA. If I say, yeah, PDD owns Temu, and Temu is, and I think it's Temu, or I was talking about Shine. We will talk about Temu and its a competitor, Shine, SHEIN, whatever, however it is pronounced. That's also coming up with IPO. But I'm not too, and I know Temu has done a great business. I think it is Temu. They opened it for business in US last year, and they've done $20 billion worth of business. That's a huge number in just 1 year. But their only, I think, moat, if you can call it as a moat, generally low pricing is not a moat, but their only claim to fame is that they sell it cheap. So I don't know how long can they continue on that one. So the other thing is they are able to sell it cheap because of the tax because of they don't have to pay import duty on many of the goods that they bring in US, because I think there is some import laws that if the good is priced at lower than some number, some few $100s, it's considered as a de minimis, and then you don't have to pay import duty on it. And Temu, many of the goods, or rather majority of them, falls under that de minimis, and so they don't have to pay the import. Oh yeah, I think Sam is saying the similar thing. USA, yeah, there's some custom loophole, and is it $75? Yeah, so they don't have to pay those duties, but I think the Congress is already looking into this to close this loophole. If that is the case, then I don't know the companies like Temu, companies like Shane, how much will they be still be able to compete and offer the goods at such a low prices. So I'll be careful.
Why is the U.S. government so stupid?
I
20
mean,
years ago, we were a monopoly.
sorry, say that again.
20 years ago, we were a monopoly. We were the leading country, and now we've been having to suck it up for the last 15 years.
I mean, so US goes and talks to the rest of the world in opening up their markets and be and let the market decide the pricing and be a free and open market. So that's why I think that also come and backfires on us in terms of us losing the monopoly around all these goods, etc. So I don't know, maybe we will become wiser and start to implement some of these protectionist measures, right? Eventually these things increases the customs duty, etc. is called the protectionist measures. So we'll see, but I think there are some discussions around changing that those loopholes in customs. Sachin says lay off 2,000 people. Yeah, Resurgent Canon after their latest announcement might be able to challenge ASML and final challenger in EUV monopoly market. Not yet. I know Canon came up with a new technology that's not exactly EUV. What Canon has says is instead of creating the print by the laser, we'll do a stamping, right? And right now that is it is still in a what do you say, in R&D phase, or it's to be proven yet. And because if you have when you have the two surfaces touch each other, there's a huge concern on transfer of impurities. And I don't know how many companies will want to take a risk right now with this new tech. Next 15-20 years, maybe, if it works out, that could become a challenger to ASML. But I'm not bothered about it, let's say, next 5 years. Yeah, so I spent some time in trying to figure out how much is this Canon's new technology could pose a threat to ASML, ASML monopoly. I don't think and maybe Sachin, you know more than me about this semiconductor. So if you have a different thoughts, do share. But But my study, at least what I got to know, is not in the near term. Did you see anything different? What's being talked about in semiconductor companies circles? Sachin? Geopolitical risks. Yeah, I think that's China, and that's already figured in. But yeah, yes, it might be able to steal some market share. I agree. I guess maybe a few years down the line. All right, let's get where were we? Okay, so all right, did I miss any other comment? No. Now, the first thing on this portfolio is both MELI and ASML. They are like very hard to reduce the cost basis because of the bid ask is so wide. Doing option trade on them is always tricky, but it is what it is. All right, coming back to the IPO side. So Reddit might be looking to go IPO in 2024. It was working with Morgan Stanley and Goldman Sachs, considering a valuation of almost $15 billion. Now, given the whole heat and the hype around the generative AI, Reddit has got tons of content, right? It's original content posted by users, so that may push up their valuation higher, and maybe they should go IPO while this whole generative AI is hot. Other one, Rubrik. It's a Microsoft-backed cloud and data security. They're also looking to go IPO. Skims underwear label from Kim Kardashian, valued at $4 billion. They're looking to, discussing strategic options, including IPO. Shine, that we just talked about, it's they actually filed confidentially, so we don't have the details of S1, but they have already filed with SEC for an IPO, so that might come next year. Chinese electric vehicle maker Zeekr, they filed for a listing this month, and it's being backed up by Geely Holding Group. So maybe IPO market is opening up again. We'll see. I think the other ones which we in the US people have been waiting for the IPO is Databricks, Stripe are the two big companies which hopefully, if the IPO market opens up, we'll see them coming in the IPO market. Databricks recently did a venture funding, so I'm not sure if they are in a need of raising money in 2024, but Stripe probably. I think Stripe investors and also want to look for also looking for an exit. So if the IPO market opens up, we should see a lot of other companies start to file for IPO. Okta continues to have the trouble. So they came back and updated that and this is the worst thing that can happen for a cybersecurity company, right? Okta provides identity management solution to enterprises customers, had a huge tailwind in 2021 when suddenly COVID forced everyone to work from home. So corporates had no choice but to let where people work from home. It means they can get connected. They are not within the corporate network, but are connecting from outside. So the whole identity management solution had a huge, they were the beneficiary of the tailwind from COVID, and since then the stock has, like a lot of other COVID beneficiaries has now lagged the market. But worst thing that can happen is if you are in identity management solution and you yourself get hacked and have the identities of your customers stolen, It's like someone broke into a police station, and so Okta came out and told that the breach that they had somewhere, I think in September this year, the impact of the breach is now thought to be way more bigger than what they had earlier told the markets. So there's all the information about their customers were stolen, customers' email IDs, addresses, first name, last name, those all were stolen from Okta. Very bad optics, especially if you are in the business of protecting information and you can't protect your own information. Other stock that made a news, GM, was up 10% on a day on the buyback announcement of a buyback of shares and in the announcement of dividend. So GM announced that they're going to increase their quarterly dividend by 33%. Next year, they're going to accelerate $10 billion of share repurchase. So before this announcement, GM was around like $40 billion. And if you buy back $10 billion worth of share, that's like buying back 25% of the company. And they also reinstated its 2023 guidance. So they came back and provided a guidance for 2023. So all three market liked it, that, hey, we're gonna get bigger dividend. And now GM is doing these shareholder friendly measures, which is buying back the stocks. Stock was up 10% immediately after this news. Now, looks like the EV market is getting tough. The other arm of GM, which is Cruise, which is into autonomous driving, ran into some issues in San Francisco. So they have pulled out of voluntarily. They have pulled out of those offering driverless services in San Francisco after that initial accident that had happened a few months ago. Number two, looks like market is realized that the EV is cooling down. EV sales are not as hot as what market thought it to be. And so it looks like GM is want to focus back on their money generating business side of the business, which is ICE, and want to return the capital back to shareholders. So I'm a little concerned as a GM shareholder on a real long-term basis, 10, 15, 20 years. EV is going to be future. ICE, I mean, once the charging network infrastructure is as widespread as the gas stations, there is no reason to own ICE. Assuming that from a quality perspective, both of them will match. Today, the only reason why I'm not buying a full EV is, oh gosh, the waiting time on the charging stations is too much. So we're planning to rather I would buy hybrid. But if the charging infrastructure is upgraded, which eventually it will, what's the reason to buy ICE? So I'm a little concerned that instead of investing for future for EV, GM is saying, okay, we're gonna return the capital to shareholders, right? Short term, yeah, it makes sense. But over long term, eventually, if you have to be relevant, you have to get into EV. Again, my thought process. So, but market liked it, hey, rather than focusing and, spending money on EV and throwing all extra cash that they have on EV, they're returning capital to us. Next, NVIDIA. NVIDIA H100, their chips, if you look at the shipment of a chips, 150K chips from Meta, 150K Microsoft, 50K Google, 50K Amazon, 50K Oracle. Companies can't get enough of these chips. and that shows up in NVIDIA results and also in the stock price. So NVIDIA is up, what, 230%, almost 230% for the year. Uber. Oh, now we are getting to looking at some of the stocks. Let me read some comments and then we'll get back to the stocks. GM is back to its 2010 price. That is true. I think, what's the GM at some point of a time, GM was what, $60, $50? And not too long ago, it was like $67 in end of 2021. Right. Now it's back to what, 30, 32 after this jump. So yeah, it has got a long way to catch up. Musk, over many things, said in his insolence, point GM and Ford controlled by unions over shareholders. I don't completely disagree with Musk. I mean, I probably disagree with him on many of these things, but some of these things, what he says is right. Jay says companies like Anduril in the done cybersecurity space, not an IP. Anduril in cybersecurity, I thought they were more on these similar to like Raytheon and those sort of companies, like into defense side. Maybe I'm wrong. I don't own this, but
That's a defense. You're right. It's defense space actually. So drones and everything.
Yeah, defense space. Yeah. Okay. I heard some. I don't own, so I haven't looked into it. Oh, they are not even an IPO, so there's no way for me to own anyway.
Yep. I mean, they were news with Roadrunner right now. I just attached an article for you. They should be fine as well going forward. I was looking at defense stocks, but what do you think of the defense space? Lockheed Martin, other guys inside there, Raytheon.
So I think given where the geopolitics is right now, so far the defense has been done great. But again, these Lockheed Martins and all those, you don't have a great margins coming out of them. These prime contractors, because the only customer that they have are the big government customers, the margins are generally slow. But if you're looking for a huge growth kind of companies, may not be these, but these will be steady companies which will not go down to zero, right? And maybe I think let's look at a defense ETF. Okay. So it has performed. Let's look at, let's say, 3-year performance, ITA. So over this year, since the conflict in the Ukraine, I think the defense stocks have done great. But in general, over long term, they don't have a much pricing power. But that doesn't mean to say that. But this could be a good stocks to own for the traditional, steady returns, dividends from that kind of a sum. Your income, so you won't get EV tax credits. Forget tax credit. What I'm worried about is waiting for 2 hours to charge the car. So that is why I'm scared of buying an EV. Barron's article, NVIDIA and 2 other players today. Thank you. I will go and read that. By the way, NVIDIA, I'm still concerned about the valuation. So all I'm trying to do, as you guys know, I sold half of my NVIDIA positions earlier, and I still holding the other half, and try to reduce the cost basis. I think too much of this, a lot of this, growth or the sales have been pulled forward. It is already priced in. Jay, I have another question. So do you have some numbers for companies added to index like Uber? Get average pop, and also what happens to those who remove from it? I don't have the numbers, and frankly, these are the pops. These are the short-term pops, and so I don't really want to focus on these ones. In fact,
Yeah,
I didn't know that Uber got added. until yesterday night when I was like writing this document, and
Yeah.
I put Uber and look at what happened to the Uber stock? Why did it pop up so much? And then I realized, okay, they got added to S&P 500.
I mean, interesting. Uber, there's stock like the Jebel or Build First Source. They came up to S&P 500, and then I think they removed the Alaska Air is out. So very
Mhm.
interesting. I just wanted to see. I mean, it's pretty short term. It's okay, but the average, if you can see a trend, that might be something which we can look into later.
Yeah. So looking at, I mean, the anecdotal evidence would be, hey, once you get added to S&P, by default, all the hedge funds, all the pension funds, all the institution money, or even for retirement money that goes into S&P 500 will
As
be
added flag.
forced to buy your stock. Right now, what does that translate into? Let's say like 5% pop on this announcement. I don't know. Maybe I can
Yep.
look at something and see.
Thanks.
Mhm. Yeah, ITA ETF. Yeah, we looked at that. EV tax credit. Also, EV sales are slowing down, means more hype than reality. Yeah, EV sales have slowed down. I think I heard even today morning. I was listening to a Bloomberg weekly podcast, and I heard that the dealers are complaining, and now that means it doesn't apply to Tesla, because Tesla doesn't have dealers. They don't use dealer network, but the dealers are complaining. So it means it might be GM and the Fords of the world that the EVs are sitting on their lots longer than what they have expected. So the EVs are not selling at the same pace at what they thought it would, and I think the concern is around the charging infrastructure. You don't want to, wait or add a couple of hours to your trip. And Americans, we do want to travel in our cars. We want to go on a long trips, but we don't want to add another couple of hours to the trip just because I have to wait for charging. So GM Ford EVs are not selling, late realization. Yeah. And again, at the end of the day, I think when it comes to the EV, eventually we will not have these 10, 20 companies which are selling EVs, right? Today we have a Fisker, Lucid, Rivian, Tesla, GM, Ford, and all the other traditional automakers. Eventually it will be 2 or 3 companies that will survive. And that's been the case in every new company or new tech, right? Since the history, since the records have been kept. When the bicycle came in, first was invented in UK, there were like 200 or 300 bicycle companies. Same was the case with the automobile companies in US. Same was the case with the number of airline companies. Eventually, there will be 3 or 4 big players that will remain. And I think Tesla will still be there. Whether maybe looks like Rivian is getting some traction. I don't know, Fisker, Lucid, GM, Ford. So I own GM and Ford, and my thesis was that they will pivot to EV, but if they're not, then they will become the BlackBerry or the Nokias of the world in face of iPhone. So then there may not be future for them. So we'll see. Jay asks, so you see Santa Rally happening this year as well, December, but there are not any geopolitical or other surprises? I don't know. I mean, did Santa came early in November, or is Santa still on his way to the markets? I have no idea. And like we got surprised in December in 2018, right? So anything could happen. And I have absolutely no idea whether the funds or the institutional investors or the mutual fund manager will they chase this rally and add more fuel to it, or have they already chased this And since the markets are up nicely, and they will take profits to show to their customers that, basically at the end of a year, get a realized profits. And those will determine where the market, will go. And I have no idea. Even Toyota is going hybrid. I mean, Toyota has the best hybrids. Anyway, the Prius, I love my Prius. Appreciate take or on XLF KRE, or would you put more money to JPM, which is a strong player for say 3-5 year time spent for new monies? So I am not big. So the way to evaluate banks is different than the traditional way that I evaluate some of the other tech companies. So, and I don't really have gotten into the details of what should I look for when I'm looking at the bank stocks. So I stick to a ETF, whether it's going to be JPM or Goldman Sachs, or it's going to be, Bank of America that will outperform. I don't know. So I stick to my own XLF in my portfolio from a financial perspective. And my thesis is that so far, 2023, it's the big tech that have worked out, and many of these, so financial sectors falls into the traditionally called, a value segment, which hasn't performed this year. And when my thesis is that there will be a time when money will start to rotate into these, like Russell 2000. A lot of these financial companies are part of Russell 2000. And that's where I do want to get a direct exposure to financial, and I own XLF. KRE is for regional banks. It's for those with a strong heart. KRE have had a really bad time in 2023 because of all the bank failures that we have had earlier. So if you don't mind that volatility, then KRE is, the regional banks are attractively priced. Some of the investors that I respect, they have been beating the drum around these regional banks. Now, what I don't know is, whether the index will outperform, or maybe some of the individuals will outperform. But those are looking at a very cheap valuation. But I just want to, me personally, I'm sticking to large financials. So XLF, for me, it's XLF. Is another comment. You may want to check the savings account investment to park your money for 90 days. Capital One. All right. What are they offering us? 1,500 bonus, 360 performance savings account promo code. High yield saving 4.30. So you deposit $20,000. Hold deposit for 90 days. So 90 days plus 15 days of initial funding period. See the bonus on your account within 60 days after holding. So 90 plus 60, or maybe you can withdraw it after 90 plus 15, which is 105 days. And then you get a bonus of 1,500 in 2 months. Not bad. Oh, so it is 20,000, it's or $300 bonus. Okay, someone wants to get some extra cash. Here's it for you. Robinhood had 5% FDIC insured up to 1 million. Yeah, Robinhood hasn't been doing that. I think they are in a tough position because of all the trading has subsided, crypto has subsided, options are not, mostly from a retail side, is not that attractive, or they have, I would say the novelty has worn off, or people have learned their lessons. So Robinhood is having a little tough time. So they have to, Robinhood is now becoming like any other. They're trying to become like any other financial services company. All right, so continuing our discussion on various stocks. Uber is proving the detractors wrong. So latest news on Uber is London black cabs. The iconic black cabs of London will be on Uber platform. And this is a big win after, NYC, New York's yellow cabs. So now instead of being a competitor, we are, cooperator, what is called the competitor plus, cooperating and competing. So now the taxi cabs, which Uber had once sought to eliminate, now they will be on Uber platform. Now in London, remember, I think it was 2 years ago when the Uber was kind of a banned from London from that. Now they are back in London, and not just that they're back, they also got the black cabs on their platform, which is a great turnaround. So I own Uber. Have been holding it for last, I think, 3 or 4 years. Maybe let me just check. When did I first picked up Uber? One second. Where's my? Yeah, so I first picked an Uber in 2019, then bought in 2022, bought in 2022 again, and then this week I sold a little bit of it for the reasons that I talked earlier, right? So yeah, only thing, and I do want to talk about this thing, which as an individual investor, I do apply this, is what is called a snap test. That if I snap my finger and this company disappears, will I miss the company? Or will customers or the consumer miss this, right? Despite all the issues that Uber have had as a company, they have had a security issues in India. They were banned from London. They have had, the whole issues around treating the drivers as a contractor instead of employees, and many state government is behind them for changing it. It always passed my snap test, that if Uber disappears, we will feel that something is missing. And that was my only reason why, like, I do want to stay invested in it, because it passed my snap test. So next time, if you, I think it's a good test as a quick check on, hey, whether do you think this company have a product that customers demand and will miss if this company is not there, right? And there are maybe many companies in which, yeah, if the company disappears, the product is great, we all are using it. If a company disappears, we have a competitor, equally big competitor, which is available. In case of Uber, there is none. Lyft tried to compete with it. Lyft is now doldrums, right? So I think that snap test has really worked out well for me. So thought I'll share. And then during COVID, of course, Uber diversified into multiple other businesses that we talked about. But this really surprised me, from almost $40. And this is a screenshot. I think I took yesterday. But now after the close, after the inclusion in S&P 500, it's now up to $60. Right? So now Friday, the announcement came that Uber will be joining, it will be included in S&P 500. And this company has generated positive earnings in last quarter, over $1 billion in profit in over 4 periods. Big fan of Dara, who has come in and changed the company, promised to shareholders around profitability, and has delivered on it. So now Uber has a market cap of around $118 billion. I have to go back and now look at what does that mean from a valuation perspective. Well, how much free cash flow does that mean has been already built into this huge, after this huge pricing gains that we see. Based on that, I'll see, do I need to defend my covered call, or let it be called away, because I think it's already too overpriced. But good to see markets finally recognizing that, hey, yeah, this is a company that we'll need. Naresh, the Lyft plus Dash or Insta is a good combo. I don't know. I mean, two negatives doesn't make a positive. Two bad companies joining hands together. Not sure if that'll make them as a good company. The unit economics for both Insta and Dash are negative. I mean, Insta makes money through advertising, right? The unit economics of making money by grocery delivery just doesn't work for them. Delivery is a tough business. You've heard me saying it multiple times, right? Over almost 3 years. It's a very tough business to make money. There is zero loyalty, no brand value, not value, but no brand affinity. So it's in the lowest margin business. So unless you have other businesses that you can rely upon, which Uber did move into other businesses, it's a long term, it's very tough to make money. Instacart has been good for me so far, like their service, less hassle of shopping. But if that's good, but I mean, they are not making money by delivering groceries. Now, could it become Amazon of grocery delivery? Yeah, if investors have a lot of patience and continue to pump money into it, or if they figure out that their advertising model or make a lot of money through that, then maybe possible. So I still want to wait to see what Card does. By the way, where's the stock right now? Cart. Oh, okay. So it's almost at close to, okay, it's 25.37. Not at all-time low, but it opened up at what, 42, and now it is 25. They can become market experts at the no consumer information. I don't know whether I'll go to Insta for that. If I need a consumer sentiments, or rather look at Amazon. But we will see. Now they are public, so we will have access to their financials and their business numbers, and that will tell us how the business is doing, and eventually stock will follow the business. All right, next one is Palantir. I say founder leaving is a yellow flag. Yeah, so if you look at when we reviewed the S1, one thing which I was always surprised, what is happening to Apurv Mehta, because one of the, as an IPO part, that once it goes IPO, he will be out. He had already checked out earlier itself. He was not a CEO. They brought in another CEO, but then he'll be out of a board of directors. I'm like, I don't know why. So I still don't know what's the story behind the Apurv's, being a very inactive or inert founder with Instacart. Did you buy Uber? No, I did not buy any more Uber. I already hold Uber in my portfolio. So, but I sold a little bit of Uber, because it was beyond, my covered call was deep in the money, and I just wanted to, sold some stocks, closed the call, kept the same cost basis. I will go back and look at the valuation to see, how overvalued Uber is right now. I don't think I'm going to buy right now at this price, specifically after this initial hype of inclusion in S&P 500 and whatnot. Other stock, Palantir, that's a story that flew under the radar before the AI became hot, start of this year. And right now there's an anxiety around their NHS deal, which is the National Health Services, similar to, CMS of US. And it looks like there are some lawsuits against whatever the contracting agency in London, in UK is, to basically kind of prevent Palantir from winning that contract because they don't want the medical data of UK citizens to be given out to US based company and get their data exposed. So we'll see. So there has been some anxiety around it, but overall, I think this year it's been up 216%. So this was another stock that flew under the radar. I think it was hyped up in 2021 when it initially came IPO, like every other IPO was being hyped up, and then eventually, market forgot about it. Analysts stopped tracking about it, and that's where is the best time for retail investors is to go and look at how the business is performing. So we started building position. I think we talked about it in January or Feb, $6 or $7. So far, so good. Other one is MELI, right? And if you look at, I think analysts can't wrap their head around this. So on July, when it was around 11:50, Bank of America analyst Robert Ford came and slashed the target price from 1680 to 1350. And then on November 28th, 2 days ago, same Robert Ford of the Bank of America raised the target price from 1350 now to 2000. Right. So it's important that we do our own study and make our opinion, because from an analyst perspective, I mean, in 2 or 3 months, the opinion has completely flipped. And that sometimes I feel that maybe they are just chasing the prices, right? How if you have, already 1350 and it's already beyond 1350, now hitting close to $1,600, how would you look as an analyst still holding it? It means if you are still keeping 1350 as your target price, you should be asking all of your customers, all the fund managers that you support, to tell them you should sell Mercado Libre because now it is overpriced, because it is now $1,600. So you have no option but to come and now start chasing it, because you don't want to tell your customers to sell it, but then what's the justification of still keeping the pricing at 1350? So anyway, this is a company I'm a happy shareholder of it. Other one is Adyen, whatever. Again, we talked about it when it fell 40%. Did a review of their investor update, and I think bought at $7 or $8. So far, it's almost $12. So sometimes these overreactions in the market, short-term overreactions, do provide an opportunity for those for us who want to go and be patient and look at a business and see, I don't think that the business is as bad as like 40% drop. And this 40% drop didn't come out because Adyen came and said anything. It was one of the competitors, and that came and talked about their business, which wasn't good. And then Adyen fell almost 40%. Okay. So I still hold it in portfolio. I think they also, as I updated you after their investor conference, they also made a change in their own policy of providing updates every quarter instead of after 6 months. So we'll see what they do next quarter. Another one is Snap and Pinterest and Snap. Analysts have now turned bullish on both these companies. So I think it's Jefferies. Again, a well-respected firm. Now, Jefferies have raised their pricing of Snap to $16 per share because they're confident that it's going to re-accelerate the revenue growth next year. So stock already has run up in last almost 6 weeks from $9 to $14. I have a covered call on it on 14 and I think on 12. So that's fine. The remaining stocks are doing good. Similar thing on Pinterest. Pinterest is again, Jeffries is now seeing conviction in companies' ability to grow revenue more than 20%. I've talked about Pinterest many times ago, and now with a new CEO, I don't think it's new anymore. Bill Reddy has been now in place for almost a year, I guess, but he's making the moves that Street likes. So now they still got an upgrade for Pinterest. Now the stock at a target price of 41, and right now it is at 35. So happy shareholder. These are some of the individual stocks I wanted to go through. Let me see some more comments. I see Ramesh is saying, on my list to sell put for Uber since I missed buying 3 months ago. Yeah, I mean, if you want to sell, again, not an financial advice, but to me, it looks like too much too soon. So in initial pop, right now they enjoy the pop from S&P 500 inclusion. So maybe we'll get a better opportunity, or maybe pick up a strike price too far out of money. Want a play on volatility, try Tesla stock instead of Uber, not recommended. Yeah, Tesla is always either number 1 or number 2 in terms of the option contracts traded per day. It used to be Apple on number 1, but Tesla has now trounced Apple to be the number 1 on option play. Other thing, Apple to end a partnership with Goldman Sachs. So I'm not going to read completely, but so Apple Card, Apple came up with the Apple Card, I don't know, maybe 3 years ago. And at that point of a time, Goldman Sachs wanted to become the banker for the Main Street instead of only for the Wall Street folks. Goldman Sachs wanted to get into providing banking services to the Main Street folks. So they were also looking for multiple ways to service Main Street folks. So they started with a brand called Marcus by Goldman. You could go and open an account, savings account with Goldman. They also had an app for aggregation and personal finance management. I had some of my ex-colleagues join Marcus. And last 2 years, Goldman has realized it's difficult to make money in trying to serve Main Street. So Goldman has been trying to wind down that whole business of consumer banking. Right? They do want to stay with the institutional and serve Wall Street. So, and of course, Goldman also became, as a part of that push, when Apple wanted to get into financial services through their Apple Card, Goldman was a partner to provide the card services. Apple is not a bank, so they can't issue card on their own. And the Goldman Sachs came and provided that services. But as a business owner, one should understand, if you are sleeping with an elephant, which Apple is, elephant can roll over. And Apple has such a big, being Apple and having billions of users on their phone, they do demand a lot. So this, though it's a great from a branding perspective, if you want to be a consumer financial services brand, Goldman got into it, but I don't think Goldman would have ever made money in the Apple Card, because Apple would have negotiated really, really hard. But Goldman stuck to it. Now Goldman doesn't see its future in consumer finance. So I guess Apple also want to make sure that the partner that they have for this card has a long-term plan to be in this business. So anyway, I think it's good. It'll be win-win for both of them. So Apple proposes to terminate its partnership, and looks like maybe Amex and Synchrony Financials may be the next guys to be in this. Okay. Own Apple and Nvidia, do not trade it. And that is, do you still second that question. Own Apple and Nvidia, do not trade it is the adage. Do you still second that? Nvidia, I'm not sure looking at right now. Apple, I would say, yeah, own it. Don't trade it. But today, if you're owning Nvidia, I have my doubts.
It's all-time high. Kind of worried about valuation going forward.
Yeah, I'm just worried about Nvidia valuation right now. Unless Nvidia can find some other business segment which is as big as, kind of a AI, there's a lot of a growth is already priced in. So that's my concern.
Kind of interesting. Yeah. I mean, this was the article on in Balance today. It talks about SMCI and VRT stocks will benefit from AI.
SMCI, isn't SMCI already had a huge benefit that they've seen? I don't own SMCI, but I think this is super micro computer. Well, look at this. 2021, 46 bucks and at 269. So this is the start of 2023. They were like almost 80 bucks. They're up as much as Nvidia. So I'm a little concerned around all these hyped up stocks just on AI. Eventually this will die down. Now the question is, how long can this hype continue, right? Which we don't know how long this bubble can continue to inflate. At some point of a time, it will deflate, and then it will return back to the normal valuation.
Yeah. So, similar with VRT, can take a look at VRT also.
I don't know which one is which one is VRT? Vertiv Holdings.
Yep.
What do they do? Vertiv Holdings. A digital infrastructure continue. So it's like they have a data center. How is it different from any other data center providers? And why would?
Yeah, I'm looking at Bear's recommendation.
This is what, okay. I mean, is there anything that is specific to VRT, or is it like a generically we are saying, hey, because of the growth in AI, there will be a lot of more need for more servers, more chips, and the data center service providers will benefit. If there's a generic one, then I don't know why VRT specifically, and not, let's say, a lot of other data center providers. Let's look at the SMCI. I see a question: has SMCI revenue seen similar increase than in Nvidia in the last 2 quarters? Let's look at quarterly earnings. Not that great. I mean, if you look at it, no. Wow, this is SMCI. Revenue growth has been 33%, 14%. That doesn't look as attractive for the stock that is up like 200%. So then is it more hype? EPS, okay, the recent quarter EPS has been down. It's because maybe they were EPS of 597% in 2022. But even if you look at operating income, has been down. Maybe they're investing a lot more for the growth, but just the revenue growth itself is not that attractive for a stock to be priced to be up like 200%. Now compare it with Nvidia. Number shows like 200%, 100% revenue growth. So yeah, so SMCI revenue growth is not that great. And let's look at what VRT. Votive Holdings. I mean, if you're talking about being benefited from AI and revenue growth is at 20%, 30%, that doesn't really excite me. Because we're talking about AI, minimum 50, 60, 70%. In the tech space, 20% growth is considered as a traditional value company, right? It's a steady growth. So yeah, not again, I've never looked at SMCI or VRT as a company, but just looking at the numbers doesn't look to be that the stock price is actually following the revenue growth. Yeah. So how about the free cash flows? 12%, 13% free cash flow margin. Operating margin of 14, 15. The operating margin have been in low teens for Vertiv. It's a high, from a business perspective, it's not that great a business look to be, like a tech companies. Even if you look at a gross profit margin, that will be what, around 30%? I would rather invest in a lot of other tech companies where the gross profit margins are upwards of 70%. Right? So yeah, VRT, I don't know. It's the first time I heard of this company, but yeah, I'm not too keen on this one. And specifically when the stock is already up 240% for the year. Yeah, Ramesh, yes, hold several covered calls, short put 150 to 70 calls, add MSFT for AI. Yes, MSFT if you really want, so I will still own MSFT, Google for AI, not just for AI players, but the fact that even if AI bubble bursts, they have a lot of other businesses that will still hold them in good stead. Right? A lot of other companies that have popped up only because of AI, and this AI bubble will deflate at some point of time, right? So I don't want to hold the other, Google, Microsoft, even NVIDIA. I do want to hold NVIDIA because NVIDIA always is able to find out some way to make money in whatever is the latest one, right? But today I don't want to buy NVIDIA at this valuation. It's a Kramer stock. Was that a VRT, Naresh? The Kramer stock? Okay. Okay. Yeah, I don't know. Maybe then it's pumped up by the followers of Kramer. Question is, what's SMCA's IP? Do they design or just manufacture? Yeah, I have no idea what. Only thing I see is here in Bay Area on 880, they have a huge complex where you can see multiple buildings of SMCA. That's my only familiarity with SMCA. I never looked at this company. Even Magdi sells billions of what can be called as burger at the end of the day. Yeah. So yeah, be careful. Right now, a lot of companies will talk about AI, will bring in AI and generative AI into conversation, whether it is any material to their business or not, because the stock gets popped. So you have to be really careful, specifically if you are investing based on AI. And at the end of the day, and then in the long term, only companies that gonna make money through AI will be the vendors of AI tools or the consultants. Let's say if we talk about McDonald's and they talk about we are using AI to do whatever, or any other businesses saying we are using AI. I forgot. I was listening to, I don't know which, can't recall. So the host was asking them questions which was related to their business, and somehow the CEO will bring in the two words generative AI into the picture. I'm like, You guys have nothing to do with that. But of course, it's like saying, yeah, we're going to start using computers for our business. Maybe in 1960s and 70s, when you said that, yeah, it was a great. 1980s, 90s became commonplace. You don't get any premium, right, for using computers. Same was the case with ERP systems. In 1980s and early 1990s, implementing ERP system will give you an advantage. It was a differentiator. It became table stakes. Having a website in early 2000 was a differentiator, became a table stakes. Similarly, using AI to improve business, today it is differentiator, will become table stakes very soon. So I don't want to buy into businesses which says, hey, we are using AI, and which every conference call they'll not come and talk about it, because it will become a table stakes. You will not get any premium as a business if you're using AI, because you will not be there if you're not using AI. Today, if a company has a website, we don't give any premium to their stock price. Hell no. Maybe we would have given them some premium in 1995 if they have a website available where you can order online. No one cares them about that, for last 10 years. Same is on with the case with AI. So be careful if you are investing, because hey, that business is now trying to use AI. So anyway, we're over 8 minutes. So I had two big things that I wanted to talk about. Maybe we'll do it next session. One was, okay, CrowdStrike earning, I'll maybe cover next time. There's a report from Fidelity Digital Asset Management around revisiting Bitcoin criticisms. And then there is another report on generative AI from Excel. So do want to talk about these. Maybe we'll do it in next session. Yep, almost 10 minutes over the hour. So let's call it done here, unless there are some questions we can talk about. Or if you have any thoughts, anything, I can hang around for another 10 minutes. But want to be respectful of the time. Go ahead.
Amazon gave me a free Prime. So I don't have to worry what I do now. Now all I do is watch videos. I'm not buying more than before, but this is increasing my safety because I'm not going outside and riding my bike and getting hit by cars. What do you think?
So you were, I'm not sure. So let me make sure I heard you correctly. So you said Amazon gave you free Prime, and then you are buying more because you don't want to go out and risk of hitting by the car? Did I hear you correctly?
Correct. I'm not buying more. I'm watching the videos.
Oh, okay. Okay. Yeah, I mean, but there are many people who have, I mean, including me, who've been buying a lot more on Amazon. So yeah, if you have been giving it to some for again, Amazon is known to invest in the hope of making money later on. So I guess that's the case. They might have offered you free Prime, thinking you'll stay, and if you'll stay, they may find out a way to make money out of you. ESTC is overbought. That is elastic. I don't own it. I have not analyzed it, but let's look at ESTC. It had a nice jump. Probably looks like the reported result. Looks like that be the case. Or hold on. Corporate action, where did it go away? ESTC. Okay, yes. They reported results and they're up almost 20-25%. Let's look at ESTC. $10.85 billion company is a sales of 1.16 billion. To me, it does look like it's overvalued, and they don't make any money right now. Let's see if they can make any operating income. I generally don't pay too much attention to the net income because that's an accounting profit. Do they make operating income? Let's look at where's their operating margins. Operating margin. They don't even make operating income. So one thing which I have actually started to follow is, if I'm investing in companies, I at least want to make them operating profit. Right? They may not make a net profit margin, but I do want to make them at least operating margin, so that they don't have to always be dependent on external, the largesse of the other loan providers to run their business. So whether it is over, so number one, it does look to me overvalued, looking at the fact that they are trading on almost 10 times sales, which today, I mean, yeah, this would have passed the muster in 2021. 10 times sales right now is too big. Even from a forward price to earnings, it's like 70, which is huge. And that is because maybe the earnings, they hardly have any earnings. They actually have a negative earnings. But what caused me concern here is on their operating margin. They don't even have any operating income. So and they never had it for whatever, for almost 2 years. So me personally, I would stay away from it to see if this is a sustainable business. At least have them make some operating income. So that's my thought on Elastic. So I'm not gonna buy this. Again, I'm not gonna buy this. You may have a different opinion, or you may be a different sort of an investor, but looking at where I am and what do I want to own in my portfolio, I probably will have much better opportunities than ESTC. What is the reason for cryptocurrency rally recently? It's enthusiasm around approval, the potential, not approval, but the potential approval of ETF on Bitcoin. And not just the Bitcoin, I think BlackRock also filed Ethereum ETF on Ethereum, not on the futures. The futures already exist, but the spot Bitcoin and spot Ethereum ETF. That's the reason for the cryptocurrency rally. There are no other drivers that I've seen in last few months that could have changed the sentiment of investors around crypto, except the fact that SEC has been engaging with all the issuers of these ETFs in a very positive way. Now, let me put it there, or at least engaging with them, which we haven't seen in last. The ETFs have been filed for almost now 6 years. We haven't seen that sort of an engagement now, till now. So that's why the market is very upbeat and pretty confident that SEC will approve spot Bitcoin based ETFs come January. So the date to watch is the first one coming up for approval is in Jan. I guess I have a date chart. So let me pull up that date chart. Okay, I'll just add that and see what the dates are. Oops. Okay. Yeah, so January 10th is the day to watch out for, because that's where the ARK 21 shares. So 21 shares is a issuer in Europe. Europe already has a spot Bitcoin ETF. So the ARK, which is Cathy Wood's firm, that had about 21 shares, and their ETF, the final deadline for SEC is 10th of Jan. And now the market is thinking that SEC would not want to give any of the issuers undue advantage by approving only one of them and holding back the decision on others. Because if you look at GLD, majority of the gold, those who want to invest in gold, invested in GLD because that was the first ETF to come into the market, right? After that, many more ETFs came. No one could get the same amount of traction. So SEC don't want to be labeled as you played favors to ARK because you approved only them and the majority of the funds went to ARK. So market is expecting that SEC will approve multiple ETFs at the same time when they approve the ARK. Now, there will be a chance and there will always be a possibility that SEC may come and reject everything. But based on the interactions that have had, based on the back and forth that SEC have had with these issuers over the last few months, I think everyone is very positive about the fact that they're going to approve it, because all the objections that SEC had raised, these issuers have been able to, overcome that one by one. And that's why the crypto market, or you see the rally happening in the cryptocurrency now. We talked about a lot of time earlier also why this ETF, once this ETF is available, now it becomes very easy for the institution money, pension money, your endowment money, your retirement money to flow into Bitcoin. Because I don't have to worry about buying a Bitcoin. I'll just buy an ETF and the ETF will take care of buying a Bitcoin. Just like I'm a gold investor, but I don't own gold directly. I just buy GLD. And it's the GLD issuer, they will go and buy the gold, and that will increase the demand for gold and hence the price. Same logic here. And Coinbase is over the roof, because if you look at it, the custodian for most of the ETF providers is Coinbase, except VanEck has got Gemini and Fidelity has their own, they have their own custody services. So Fidelity will use their own service for their own ETFs. So that's why now if you go back and look at the Coinbase custody solutions, they charge 10 basis points per month, if I recall correctly, 10 basis points per month to custody Bitcoin. And then different analysts have their different projections saying if, let's say, 10% of the ETF, the ETF can corner 10% or 15% of overall Bitcoin volume, and one Bitcoin is, let's say, 50K, and then if 90% or 80% of custody is being done by Coinbase, what does that mean for Coinbase revenue, considering 10 basis points as a fee for custodying it? So that's why, based on those calculations, market thinks Coinbase gonna make some money hand over fist, and that's why Coinbase shares are up. So again, these are the proxy of crypto economies. Okay, so moving to the next, Amazon give me Prime, not buying anything. Oh, okay. ADI has a good balance sheet, but stagnant stock. ADI, what is ADI? You're bringing in some new stocks, which is great. ADI. Oh, analog devices. This is a analog chips, like similar to Texas Instruments. Stock is a stagnant stock. Does that mean over oh, this is a great stock for trading options around it, and reduce the cost. Does it offer dividend? Okay, so let's look at it. Let's look at an annual. Okay, 2023, because of rationalization, the revenue growth is not that much. How about the balance sheet? They own $958 million. How much their overall expenses are? Operating expenses, okay, so they must be holding some debt. Free cash flow is $7. Yeah, it's a 30% operating margin, gross margin of 64%. Yeah, this is what I like, right? Again, this is a manufacturing company, and having around 65% gross margin, right? It's great. An operating margin of 31%. Compare that to with other companies that we saw where the gross margin was like low 20s and operating margin was negative. 28% free cash flow margin. Yeah, so this is a company which looks to be in the maturity cycle of the business, means will not grow as much, but we can generate enough cash and either generate enough cash or return cash to shareholders. Do they do share buyback? Also see any stock-based compensation. See, they're doing share repurchases. Yeah, so this company is in a maturity phase, returning capital to shareholders. So steady, ready. Don't expect too much of a growth in this. And they're doing the right thing of returning capital shareholder and paying dividends, doing both. Why not REIT instead? I think REITs have performed nicely. They said, yeah, if you are a dividend investor and want a steady income, REITs are a good way. There are dividend ETFs. Those are a good ways to do it. If the objective is to get a steady dividend, then I would not want to invest in individual companies. I mean, you invest in individual companies if you really like that individual company. Cool. All right. Guys, that's it for today. So great to be back. Good to talk to you again after a gap of 2 weeks. And yeah, hope we'll continue this and talk to you again next week. Thank you, everyone. And we'll see you next week. Bye-bye.